So, a couple of days ago, we said if we would reach these levels, people would short sell. The reason for that was crashing forward. We had a double bottom. One, two, call it three almost. I said from here, you want to be bearish. Now, if you would have stuck exactly to what I said, you would have missed this out. If you gave yourself a bit of wiggle room, you might have entered. I did not enter this one. I've been trading some other stuff. But the outlook was correct. And given what's happening in the world, I think we are going to see even more pain for this pair. Okay, so let me show you what I mean by that. So if I apply a line here, you got yourself a triple bottom. 1, 2, 3. And you even have this one here from 2020, which break this, adds even more significance to these levels. So if we focus on these, just specifically these three levels and what's happening across the world, then we're dealing with a large descending triangle. And if not, there's a double, triple bottom. So how can we use that information? Well, we would measure from the midpoint. Some people are going to measure from the base, but then you get really exaggerated targets. In fact, even this one I'm showing you here is probably going to be exaggerated. And you're looking at that. You can correct that as well. So this is 13%. Let's correct this to make it roughly 13% as well. You're still looking at a slide of 732 pip. And this is a weekly chart. We can flip this to a daily chart, and then we can say, okay, let this settle here. In fact, let it go up a bit if it wants to. But if it would settle here, just trade sideways, that would be ideal. That one could potentially place an entry like that. Stop loss just goes above the daily candle, and you're looking at a risk to reward ratio of 5.64. And we saw something similar to that in oil prices, just triggering a double bottom. You can check that out to see how that played out. Played out really well. Hasn't reached a target. But even here, we haven't reached, it hasn't even been triggered. But we don't even have to wait for that. We might be possible to just target something like 50. That's 4 times X. If we trigger 52, that's a 2.26X. So it's not that bad given that this is 4X. Good risk reward ratios in 4X or something like this. And it's definitely something to watch. And what we need here is probably the EU retaliating or start to see weak data, which looks very likely unless Trump would back off or unless Trump gets what he wants, which is unlikely. As I discussed in our weekly outlook that will be up on Thinkmarkets YouTube channel today, you will see that we talk about the fact that they want to have a balanced trade with the world. So, for example, if US buys goods for $100 and China buys goods for only $50 from the US, then the US would like China to buy another 50, which is quite unlikely. And they want to do the same on the EU. In fact, in the EU, they wanted to drop VAT, although VAT is something that has dropped across the board. Like even for European manufacturers, you pay VAT. You pay VAT for everything, more or less. And obviously, that's a cornerstone of how the European governments are funding themselves. That, alongside with income taxes up to 50%, yes, and then another 30% or so on the employer. Um, yeah, it's not going to happen. So obviously, if the U.S. is very stubborn, they will get themselves into trouble, because what they have done here is a form of Brexit. So Britain decided to leave the EU and thought it could get good and better trade deals with other countries. That has not happened. In fact, it's now stuck there. And while they have lower barriers now, so there's definitely a benefit of them being out, and it could potentially be paying off. Um, they're not in any position to place any strong demands on any country right now, given that they're isolated. And that's the same what's happening now with the US. It's isolating itself, and we'll see how this plays out. Thank you.